India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
All right, well, those are visuals of the winning India cricket team in Delhi. They've touched down in Delhi. I mean, it's going to be a big day here, a day of celebration, a day of jubilation. They're in Delhi, but they will be here in Mumbai, and they'll land here in the afternoon. They'll be traveling all the way from the airport to, of course, the Wankhede Stadium. There is a open bus parade, which has been organized in town, which is the southern part, the southern tip of the city here in Mumbai. And of course, there is a small ceremony at the Wankhede Stadium itself with BCCI officials, etc. So, it's going to be a big one. 4 p.m. onwards, we of course will show you visuals through the course of the day in terms of what is happening. But 4 p.m. onwards, we're going to be telling you, we're going to be kind of sort of covering live all of the action which is coming through. Guys, morning.
Morning, guys are with us now. I mean, I like this. I love this whole AI and AR, right? Almost getting that same vibe and feel, even without being in Delhi. So, yeah, I think it's going to be fantastic momentum.
The world champions are back and, look forward to the parade later this evening as well. So, as Prashant, you took us through that, what's going to be going on, you get your goosebumps. We are champions, and the manner in which we came back, fighters, I loved it.
Yeah.
Absolutely. And, we'll, as I said, it's a full day's worth of program, both in Delhi and here in Mumbai, and we will sort of get you coverage of all of it as the day proceeds. But we got business on hand. We got to look at what the market is going to look like as well, because we've had a real good breakout yesterday. So let's actually begin what you need to know in terms of this trading setup this morning. So yesterday, the Nifty decisively broke above the resistance level. Resistance zone, really, which is, of course, the previous high and slightly above that as well. We'll get to specific levels in a bit, but it was a decent, good breakout which happened. Now, overnight markets have been pretty positive. You have US markets which rallied after yields fell, right? And why did yields fall? I mean, the changes are on your screen. The Nasdaq was up about 0.8, S&P 0.5% higher. Yields were down 7 basis points. I'm talking about the US 10-year, and that is on the back of, ISM Services Index, which actually was weaker than expected. So that essentially is those are the changes, those are the numbers which came through. Dollar index was down as well to about 105.31 levels. The thing is, weaker data in the US is not necessarily great for stocks. It's actually bad for stocks. But what comes before things turn sour perhaps is rate cuts and expectations of rate cuts. And rate cuts are positive for stocks, not weaker data. So, we are somewhere in the middle of trying to decide, what comes first. Whether the Fed will be able to respond before the data really turns sour and the real economy really starts to hurt and we'll be okay. Or it's going to be the other way around, in which case, it'll be bad for stocks as well. So we're in that muddle, we're in that go-through kind of phase. Now, tonight, US markets are shut. So there's not very much activity out of the US later today. But tomorrow, you essentially have the jobs number, the jobs data, the monthly big jobs data, which will come through. And I think it'll be closely watched because we've had Fed officials, Fed Chair Powell earlier this week coming through and essentially saying that we're in a period of disinflation as opposed to the first quarter when data actually surprised on the upside. So the jobs number tomorrow, I think, becomes important. Just to sort of circle back to levels here, as I said, we decisively broke above the resistance zone of 24,174 to 24,236. The immediate target for the Nifty, we're in a up and up kind of a phase. And of course, now we got to look at extension numbers. The immediate target is 24,566. That is the daily upper Bollinger Band. And above that, you basically you need to take a look at the equality level. You look at the last move and then kind of sort of assign values on an equal basis on the upside. That gets us to about almost 24,900 levels. But step by step, 24,566. And then, of course, I mean, you look at higher numbers from there on. On the way down, I mean, we should not break the recent low of 24,056. I mean, that should not go. In any case, we're putting quickly a lot of distance between that number and where we are at. Bank Nifty also broke above the previous high of 53,181. Immediate target, again, is the daily upper Bollinger Band, which is 53,818. So we left off at 53.90 or so. On the way down, supports will come in at the 40 hourly, which is 52,552. Again, because the gaps have been so large, especially for the Nifty Bank, I mean, from last traded price to the support level, there is a bit of distance which has emerged. I just want to leave with one number, which is the FI positioning in index futures. That's now jumped to an even higher level. There was a bit of a drop yesterday day before yesterday compared to the prior day, but yesterday we are back to a new high, which is about 3.78 lakh contracts long. So positioning is one-sided, but for now, it is definitely working. The GIFT Nifty will come up on your screen indicating what the start is going to look like. Another 9,500 points or so. So, galloping ahead.
Absolutely. And that's been the way for, I think, global markets. Us here in India, the Nasdaq. This morning, the topics in Japan has hit a fresh all-time high. So it's just up and away for global equities. Just for us, I mean, to add to what Prashant has said, we also had the Fed minutes come out yesterday, but the minutes were released after the markets shut. The markets had shut earlier than usual because of the 4th of July holiday. And they're essentially reiterating what we already know, what the Fed chair himself has been saying, that we need more data to get more confidence to see that this move down in inflation, that's sustainable, and that sustainably it will come down to 2%. So that's what the Fed minutes said. There was some, divergence between how the members are voting, but in a nutshell, that's the summary. Just to talk about the actual numbers on the weak data that we got out of the US, we had weak labor market data and weak ISM services data. So on ISM services, the gaps are quite a bit. That's why I'm just putting up the numbers as well. The services PMI came in at 48.8. That's even below 49. The estimate was 53.5. So that's the extent of the miss. And the ISM services business activity, again, that was below 50, whereas the expectation was 61. So therefore, the miss was very large, and therefore we got that reaction in yields and in the dollar as well. And add to this, the private sector payrolls report, because the non-farm payrolls number comes out on Friday. The ADP number was out, and that was also a miss. The addition was about 150,000 jobs, which is lower than May. May was 157,000. And this number is also lower than estimates, which were at 160,000. And all of this put together led to that down move on yields, as Prashant mentioned, 6-7 basis points down. The dollar was on the back foot as well. So that also happened. By the way, the only thing positive in all this is oil, because oil had rallied up to 87, above 87. But this morning, Brent is showing some red. It's about 0.5% lower. So that's the only positive coming out, from our perspective in terms of the negative data that we had. Now, coming back home, the buying yesterday was powered by a lot of FII cash market numbers as well. The kind of buying that we're seeing in banks and in HDFC banks. So numbers are on your screen. Almost 5,500 crores of FII buying. Domestic institutions were on the sell side. They sold off close to about 1,000 crores. And I guess when we're talking banks, maybe business updates will keep the momentum going as well. There are lots of them have come through, and some are mixed. Bandhan is for instance, a little more negative than the others. But then you have a Bajaj Finance to look at today. Yesterday's poster boy was HDFC Bank. My sense is this could be the one for today, at least as we start off, because those numbers are looking extremely positive on the business update side. Nigel. Well,
just one word on the FI numbers, right? The flows, as you said, they were positive, but going by the kind of delivery you saw in HDFC Bank yesterday, actually, net, they weren't big buyers in yesterday's trading session, ex of HDFC Bank. And I'll tell you what, we're missing the FI shots in the system. Otherwise, this market would have been well and truly on its way to around 25,000 odd. But let's run you through the top cues for today. Global cues are positive, mind you, because you have yields that are lower. You have the dollar index as well that's softer. And that bodes well for us. In addition to that, you have, the US markets that are shut. So no shocker coming in today. And then the street takes note of the jobs report, that numbers that come out tomorrow. Today, we have the weekly expiry that plays out on the Nifty as well, so expect some volatility in the second half of trade. The only fly in the ointment is that Brent crude prices have moved up to around $87 per barrel. And that's getting a little bit uncomfortable with the inventory is going in lower and demand as well bouncing back. So that's a bit of a problem pocket. But we've seen in the past, it moves to around $90 and then it comes down. So hopefully that's the case even this time around. Yesterday, we had some bit of short covering that we saw on the Nifty. While on the Nifty bank, there were some long positions that were added. And that perfectly ties in what the FIs did. They added more than 25,000 long contracts and they covered close to around 5,000 short contracts, which takes the total long positioning to around 84%. And in a matter of a month, what a big change we have seen in the FI positioning. Just a month or so ago, you had them being net short on the index. And now, in fact, they've moved to being net long on the index. And in percentage terms, if you can get that number as well up for you, from being net short, to the tune of close to around, the ratio earlier was 84% in favor of the shorts. Now they're long with 84% of their positions on the long side. So that's really something that you should take note of as well. Well, moving to the client positioning, the FIs as well as the clients, they're on opposite sides of the spectrum. So the FIs are net long, while the clients now are net short with close to 2.5 lakh contracts on the short side. Moving to the options data, since today you have the weekly expiry that plays out, the 24,300 call as well as put were fairly active. And you get a sense that there's a short straddle that plays out here. That's, you write the same strike and in fact you pocket the premium. And the premium you pocket is around 150 rupees, which brings us to the levels. 24,150 on the downside, 24,450 on the upside.
Right,
Nigel, you have to get the throat ready. You have to cheer, scream and shout, right? 5 p.m. onwards, but I'm sure it'll be better by then.
Okay. Some water and it'll be well. Well, let's get you some money market views here. Parul Mittal of Standard Chartered Bank says that the USD INR traded in a tight range between 83.35 to 83.6 to the dollar as dollar inflows after inclusion of Indian bonds and major global bond index were offset by exporter selling at the end of the quarter. He expects the pair to trade in a narrow range in the near term as the local banks are likely to stay active. He expects the pair to trade between 83.25 to 83.65 to the dollar in the coming week.
On bonds, Parul says Indian bond yields have traded range-bound despite the rise in global yields, likely driven by stronger local demand supply dynamics. He says market would take cues from the union budget and progress of the ongoing monsoon session in the near term. She expects the 10-year benchmark bond yield to trade in a range of 6.97 to 7.03 in the near term.